Hi viewers, welcome back. Today's section we are going to discuss about fundamentals of partnership accounting for class 12. So let's start. This is the fifth part of the video on this topic. We have already discussed what is profit and loss appropriation account, how to prepare, what is the format, and along with that we discussed two problems. Today we are going to discuss one more problem. There is some differences on this type question. If you want to watch the previous videos, you can get its link in the description box below. Now let's look at the problem. Suresh and Naresh were partners with capital of rupees 75,000 and rupees 45,000 respectively. Again, we can make the summary. There are two partners, Suresh and Naresh, and their capitals are rupees 75,000 and rupees 45,000, and interest on capital at 6% per annum. Again, we have to calculate interest on capital. Here Suresh 75,000 into 6%, the amount would be 4,500, and Naresh 45,000 into 6%, the amount would be 2,700. Again, go through the question. Naresh is to be allowed on annual salary rupees 3,750. Here in this question, salary is given annually. Annual salary is given. So, we should not multiply by 12. Here we can write here salary Naresh 3,750. During the year 2016-2017, profit prior to the calculation of interest on capital, but after charging Naresh salary was rupees 18,750. This is very important point in this question. Here the profit 18,750 is given. This profit is prior to the calculation of interest on capital, but after charging Naresh salary. Okay, but here we should consider the profit prior to the calculation of interest and also prior to charging any type of salary to any partner. Is it clear? In this question, this profit 18,750 is given after charging Naresh salary but before charging interest on capital. But we should consider the profit prior to the calculation of interest and any other expenses. So, first of all, we should not charge the salary to the partner before the profit. So here it is changed. The profit is changed. It means that we have to add the salary, means the Naresh salary, to the profit which was given in the question 18,750. So here our new profit will be 18,750 plus 3,750. The total profit is rupees 22,500. Okay. So profit we should ascertain before charging any type of expenses to the partner. If in case they have already charged, then we should add those expenses back to the profit. Okay. This is the main difference in this problem. Again to the question, a provision of 5% of profit to be made in respect of commission to the manager. In the previous section, I have already told you that only the expenses relating to the partner will be made in this type of account. But here, we have an expense related to the manager. This we cannot show in profit and loss account, but we can show it as working note. Okay, the question is saying that provision of 5% of profit to be made in respect of commission to the manager. Here, the 5% on commission to be allowed to the manager. That 5% we can show it as working note because we cannot enter this 5% to the profit and loss account. Okay, so our profit is rupees 22,500 and manager is not a partner, so we cannot show it in the profit and loss appropriation account. So the manager's commission equal to 22,500 into 5%. That's equal to 1125. Okay. This 1125 is the expenses that needs to show in the profit and loss account, right? We have to ascertain profit after charging all the expenses from profit and loss account. Again, our profit will be changed. That is, our profit is 22,500 minus manager's commission 1,125. The amount will be 21,375. This is the actual profit. If there are any expenses related to profit and loss account, then we have to deduct first. Only then we will get the net profit that needs to show in profit and loss appropriation account. Clear? It is very simple. The expenses not to relate to the partner or any expenses that is related to profit and loss account should be deducted from net profit, and an expenses that is related to partner but is charged before making to the profit and loss account, that should be added back to the profit. That's the things. Now we have to record these items into the profit and loss appropriation account and distribute the profit among partners. This is the format of profit and loss appropriation account. We should mention the heading and date. Also mention the sides, debit side and credit side. Particulars, amount, particulars, amount. Okay. Now we can go on recording the items into the profit and loss appropriation account. We know profit and loss appropriation account begins with the net profit. Here our net profit is 21,375. So it will be credited in this account. And we have to charge all expenses in the debit side. First, interest on capital. Suresh 4,500, Naresh 2,700, total would be 7,200. And next item is Naresh's salary 3,750. Now we have to total in both sides and we need to see which side the amount is more. The credit side is the more amount 21,375 and we will deduct all expenses from this 21,375 and we will get the balancing figure 10,425. This is the net profit. This is the divisible profit. This profit is distributed to partners according to their profit sharing ratio and this profit is transferred to their capital account. Actually, the profit sharing ratio is not given in the question. So we have to distribute the profit equally to the partners. Okay. If profit sharing ratio is not given in the question, we should distribute the profit equally. Here, half portion is given to Suresh and half to Naresh. So our net profit is 10,425. This 10,425 half will give to Suresh, that is 5,212.50, and half to give Naresh, that means 10,425 into 1 by 2, 5,212.50. Okay, this also we will transfer, we will record in the profit and loss appropriation account to net profit transferred to Suresh's capital account 5,213 and Naresh capital account 5,212. Okay, this is how we are preparing the profit and loss appropriation account.